Okay, I would not say our business strategy has changed. We've just widened our horizons. Our business has previously been managing pension schemes on a segregated basis. That will still continue, but riding on our expertise, investment and research expertise, we have begun branching into 7 new product lines. 1 is income drawdown fund, 2 is high net worth and institutional investors, then also an umbrella pension fund, and then doing a property fund, both income and development, and then having a regional quoted public equity fund for sub-Saharan Africa, and then also coming up with a private equity fund. These are basically those investment areas which our clients are demanding as their assets grow and for diversification. So we have built up expertise in these areas and will be moving into these funds in a phased and systematic manner. There's a good market there. High net worths are both the local Kenyans and the Kenyans in the diaspora, and also other investors from outside Kenya who wish to partake in our investment going forward. So there is good business. You just have to get the customer service right and continue being research driven. What we can offer you is superior, consistent, long-term returns above what you yourself would individually get, or if you invested with other investment houses, backed by our quality staff with a very thorough research-driven approach, underpinned by a very good risk and compliance culture. Investment is about research. Once you can get it right where to invest, the rest is a mechanical process. What we have done is that we've hired very good quality staff and we've empowered them. We have devolved responsibility to them, given them a good challenging career, and most important, we have aligned them to the business. That is, all our staff have got a piece of shareholding in the company, and that aligns them in a very long-term manner. And that's why we don't have a very high staff turnover as other firms. Investors will always be jittery towards election times, but these jitters also throw up opportunities to invest, especially if you fall back on your research-driven plan. So we foresee that the elections will go well. We foresee markets will climb after the elections, and hence there are good opportunities now to really build up a good long-term portfolio. Where we see growth is by having our proprietary funds, which can attract investors into them, having a good property fund, having a regional quoted public equity fund, continuing to grow our income drawdown fund, which is an alternative to pensioners purchasing annuities, and also having an umbrella pension fund for the smaller pensions to invest into, because at times they find it a bit cumbersome and expensive to go the segregated approach. And also another growing area is having a private equity fund in order to give our existing clients some exposure into private equity, which if done right can give very good returns. There are always challenges in life. I think the major challenge we've seen in our industry is undercutting of prices by competitors trying to get market share, which just harms the whole industry at the end of the day. And that is why we are moving towards proprietary funds where we can have more control over pricing than having to be subjected in what we can term the race to the bottom in regards to pricing. The other challenge I see is on technology. technology is moving very, very fast. We are having newer, younger, very techno-savvy investors. So we have to align our technology to suit their needs. The other challenge comes in HR. In the newer, younger, very skilled workforce. It is integrating them into the farm, into the culture, mentorship programs, training, and personal coaching for them. Okay, a proprietary fund is like an example is instead of me managing your portfolio and charging you a fee for it, which you can always, after a while, negotiate the fee or decide to move that fund to a competitor. But if we have our own funds, like a property fund where you invest into on a fairly medium to long-term basis, at least we have those assets for a number of years, and we can invest them on a good medium to long-term approach and give you back superior returns. Investment ideally should be medium to long-term, but in the short term, you can still make good returns, basically in the money markets if the interest rates are high. But we normally prefer medium to long-term investors. Well, we still have with them linkages in which if they ever have funds that they can invest in through us, and also that they are excluded from opening another fund management firm in Africa.
In Africa?
Yes.
Okay.
Yes, yes. So we still have linkages with them. The Genesis Group used to manage pension funds and only in emerging markets. So still, even under them, we used to deal with other good name offshore providers to help us invest overseas. No, what I can add is to encourage Kenyans to save and invest so that we can put the destiny of our country in our own hands.